Do you know what to look for in a due diligence checklist? If you're scratching your head, don't worry, you're not alone. Due diligence, in simple terms, is the investigation or audit of a potential investment or product to confirm all facts. It could involve reviewing financial records or checking out customer contracts. It's like doing your homework before a big test, but in this case, the test could be a significant business investment or acquisition. And this is where a due diligence checklist comes in handy. It's your guide to ensure you cover all the essential areas during your investigation. Whether you're an investor, an entrepreneur, or a business owner, understanding and effectively applying a due diligence checklist can be a game changer. And that's what this video is all about. We're going to break down the due diligence checklist into easy-to-understand steps. So, are you ready to delve into the details of a due diligence checklist? Let's begin. Firstly, it's crucial to examine the financial health of the company. This is the backbone of your due diligence process. A company's financial statements are like a report card, showing how well it's performed in the past and its potential for future success. Let's start with the profit and loss statement, also known as an income statement. This document summarizes the revenues, costs, and expenses incurred during a specific period of time. It's important to review these statements for both the year-to-date and monthly. This gives you a clear picture of the company's profitability, and it allows you to identify any trends or patterns that could impact future performance. Next, we have the balance sheet. This document provides an overview of a company's assets, liabilities, and shareholders' equity at a specific point in time. It's a snapshot of the company's financial health and can help you determine if the company has the resources to meet its obligations and invest in future growth. But the financial investigation doesn't stop here. You'll also need to check tax returns from previous years. These documents can provide additional insights into the company's financial health and may reveal potential liabilities or risks that aren't evident in the profit and loss statements or balance sheets. In some cases, you may also need to inspect bank deposits, statements, and check registers. This can help you verify the company's cash flow and identify any unusual transactions that could raise red flags. Remember, understanding a company's financial health isn't just about looking at the numbers. It's about interpreting these numbers to gain insights into the company's performance, potential, and risks. It's about asking the right questions and seeking answers that provide a comprehensive picture of the company's financial health. In conclusion, reviewing financial statements is not just a task to be ticked off your due diligence checklist. It's a critical step in your journey to make an informed decision about investing in a company. Remember, understanding financial health is the backbone of due diligence. Moving on, it's time to analyze the customer base and personnel records. In the world of business, understanding your customer base is like having a secret weapon in your arsenal. It's the compass that guides your business decisions and growth strategies. Look into the diversity of the customer base. Is it broad or concentrated? It's always beneficial to have a broad customer base as it reduces reliance on a few key customers. Consider the customer contracts, if any. These contracts are a testament to the company's reputation and reliability. They also provide a glimpse into future revenues. Are these contracts long-term or short-term? Long-term contracts can provide a certain level of security for future income. Now, let's pivot to personnel records. Employees are the backbone of any business. Their skills, experience, and dedication play a pivotal role in driving the company forward. Therefore, verifying the payroll schedule, personnel policies, and records is imperative. Begin with the payroll schedule. Is it bi-weekly, monthly, or something else? This will give you an insight into the cash flow management of the company. Next, review the personnel policies. These policies reflect the company's values and work culture. Are they employee-friendly? Do they comply with the labor laws of the region? Are there any pending lawsuits or employee grievances? Finally, delve into the personnel records. These records can reveal a lot about the company's hiring practices and employee retention. Do they have a high turnover rate? If yes, it could indicate potential problems within the company's management or work culture. Every bit of information, every detail, Every number you uncover during this analytical process is a piece of the puzzle. It's these pieces that, when put together, provide a clear picture of the company's operations and customer relations. And remember, the devil is in the details. A meticulous review of these aspects can save you from future surprises. Analyzing these aspects can provide a clear picture of the company's operations and customer relations. Next, we need to assess the condition of equipment and review all contracts. Embarking on this journey, we should understand that the condition of equipment is a significant factor in a business's value. Whether it's a high-tech manufacturing plant or a cozy coffee shop, the state of the equipment can affect both the operation and the bottom line. If the machines are worn out or obsolete, they could become expensive liabilities. On the other hand, well-maintained, state-of-the-art equipment can be a valuable asset, enhancing productivity and profitability. Hence, it's crucial to inspect the FF&E list, which stands for furniture, fixtures, and equipment. Equipment leases are another potential pitfall. Some businesses prefer leasing to outright purchase due to the lower upfront costs. However, these leases could tie the business to long-term obligations. Therefore, it's essential to review all equipment leases, understand the terms, and calculate the potential costs. Now let's shift gears and talk about contracts. Contracts are the lifeblood of any business. They outline the terms of relationships with suppliers, customers, and other stakeholders. They could include gaming reports, maintenance agreements, advertising deals, or any other type of agreement. Gaming reports, for instance, are crucial for businesses in the entertainment industry, providing insights into the gaming machine's performance. Maintenance agreements ensure the upkeep of equipment, while advertising deals outline the terms of promotional campaigns. Each contract can have a profound effect on the business's operations and profitability. For example, a maintenance agreement with unfavorable terms could lead to excessive costs, while a lucrative advertising deal could boost revenue. Therefore, it's vital to review all contracts, understand their implications, and identify any potential risks. In summary, assessing the condition of equipment and reviewing all contracts are essential steps in the due diligence process. They allow us to understand the business's assets and liabilities better and make an informed decision about its value. Contracts and equipment are often overlooked, but they are essential components of due diligence. Now, let's turn our attention to licenses and policies. This part of the due diligence process is vital. It's all about making sure that the business you're considering is operating legally and has all the necessary permissions in place. Every business needs licenses to operate, and these can range from gaming and space leases to liquor licenses and business permits. It's essential to verify all these licenses and ensure they're up to date. Don't forget, licenses aren't just about permission to operate. They're also about compliance with laws and regulations. A business that doesn't have the necessary licenses or has let them lapse could be in serious legal trouble. This could cause significant problems for you if you take over the business. But it's not just about licenses. You also need to evaluate all the business's policies, forms, and manuals. These documents can tell you a lot about how the business operates and its core values. Look for things like employee handbooks, operating procedures, and safety protocols. Are these documents up to date? Do they reflect current best practices in the industry? Have they been implemented effectively? These are all questions you need to ask during the due diligence process. Policies and procedures might seem like boring paperwork, but they're actually a crucial part of the business's operational backbone. They ensure that everyone in the business knows what they're supposed to be doing and how they're supposed to do it. They also help to protect the business from legal trouble. It's also worth noting that these documents can be a good indicator of the business's culture. Do they prioritize safety and employee well-being? Are they committed to customer service? The answers to these questions can give you valuable insights into the business's values and culture. So as you can see, verifying licenses and evaluating policies is a crucial part of the due diligence process. It's not just about ticking boxes. It's about making sure that the business is legally compliant, well-run, and has a positive culture. Licenses and policies form the legal backbone of the company, making them an integral part of the due diligence process. Finally, let's wrap up our due diligence checklist. We've journeyed through the intricate details of financial statements, customer base analysis, personnel records, and beyond. We've assessed the condition of equipment, scrutinized contracts, verified licenses, and evaluated various policies. Now, it's time to finalize employment agreements and conduct meetings with staff if required, ensuring you're on the same page with everyone involved. Don't forget to set up a meeting with the escrow company to discuss the services they offer for your business. Remember, due diligence doesn't stop here. There might be additional tasks to consider based on the unique circumstances of the business you're eyeing. This checklist is not exhaustive, but serves as a sturdy foundation for your due diligence process. It's a tool to help you navigate through the complex terrain of purchasing a business. Remember, due diligence is a meticulous process, but with this checklist, you're well equipped to make an informed decision.